About commodities, we of course have with us here in the studio our guest host John Noonan, Senior Analyst at Thomson Reuters, and joining us now to discuss the outlook for some of the major commodities. Give us his insights, Alan Heap, Managing Director, Global Commodities, Australia New Zealand at Citi Investment Research. Great to see you there, Alan. Thanks so much for joining us. Just firstly, I guess, what commodities are you most bullish on at the moment? I understand you do like the bulk commodities.
That's right, yes. Definitely a preference for the bulks over the base. That's to say coal, iron ore for the next few years, but as you alluded to in your introduction, I do have some concerns further out. And then on the base metal side, copper is the standout. Hard to get past the bullish arguments that float because there's very little new supply coming on stream. So those are the main ones that we prefer.
Just on iron ore, because that was interesting. This week we did hear from Goldman Sachs too, saying that it sees iron ore oversupply by 2014 due to the Chinese steel market maturing. Is that why you see iron ore being less attractive in 2 to 3 years' time?
That's part of the equation as the growth of crude steel production in China slows, as the economy matures away from infrastructure towards services, and then all the new supply that's coming on stream just overwhelms it. But in addition, I have some worries from a more structural standpoint that some of the factors that have made iron ore such a great business over the years are being eroded.
Hi, Alan. John Noonan here. Just a real quick question. You alluded to the supply side of the equation. On the demand side of the equation, for the base metals, particularly for copper, I mean, it's held up really well despite all the worries about double dip in the U.S., et cetera, et cetera. Do you see the demand for copper staying strong, or is that a China and emerging market story, or is that a global situation?
It's mixed. It's debatable whether China and the other emerging markets can do it on their own. So far this year, demand for copper in the developed economies has been surprisingly strong, boosted by restocking. It is starting to slow now, however, but I think so long as China remains robust, the demand side of the equation will be sufficiently resilient to continue to support prices and indeed propel them higher.
Just in terms of going back to what you were saying about coal, thermal and coking coal, why is it that you favour those?
Well, the key difference between the coal market or the coking coal market and iron ore is this supply side issue. Whilst there's a lot of new supply of iron ore coming from Australia and Brazil, coking coal is a genuinely rare commodity and there's not much new supply coming.
And just looking certainly at gold, something that we've been talking about, where do you see that going? Because there seems to be a bit of a different view about whether it's going to be viewed as a safe haven or whether it may not fare so well. What's your outlook for gold?
Yeah, it's a tough one. It's very much an issue of, I think, are you in the double dip camp or at least want to have a halfway bet in that area. From a central forecast point of view, we don't see a great deal of support for gold from the two major engines which have been concerns about double dip and contagion from Europe. Neither do we see renewed US dollar weakness, which has been the other propeller of gold prices. So from that point of view, I'm not terribly bullish gold from here.
What about you, John?
Oh, gold is a tough one. I was quite bearish on gold a while ago, and I was amazed how well gold has held up and has come close to the all-time highs. Like Alan, I thought once the sovereign debt crisis in Europe started to simmer down and stabilize, I thought we'd see a really healthy correction in gold. It still manages to stay higher. It's got me a bit confused. There's a lot of reasons investors buy gold, though, and one is the belief that the major economies of the world, including and the emerging market countries, want to keep their currency weak or want more weakness in their currency and fight for more weakness in their currency. So you get that gold's attractive in that environment. Then, of course, there's the inflation and bond market hawks, but there's really no sign of inflation anywhere. In fact, we're worried about deflation. So that's one of the reasons I thought gold would come off. I'm amazed by the price strength. I can think of quite a few reasons why gold should have a healthy correction to the downside, but so far I've been totally wrong.
Yeah. So, I mean, what do you think it could be? I mean, if the Fed decides that they do need to do more stimulus, they need a stronger quantitative easing, or we see perhaps, you know, the unthinkable happen, and at the US midterm elections, the decisions made that more stimulus is needed if the jobs figures are just so bad in the US. I mean, could that?
Well, I think what would propel gold is if the Fed decided to do a really, if the U.S. economy suddenly looked like it was definitely going to double dip, or the fears arose again, and the Fed acted by, going to very strong quantitative easing measures, which is a debasing of the U.S. dollar, then you would see gold move quite a bit higher. But we've sort of backed away from that scenario now. It appears that the U.S. economy probably isn't great, but it's not that bad. And the Fed is probably going to go to great lengths to say, listen, we are prepared to do something, but we're not ready to do it right now. So while we back away from that scenario, I think gold should be toppish.
Yeah. Alan, if I could just ask you, too, as well, about the data you've been seeing from the U.S. and what your view is of the way that economy's headed.
Yeah, I think that picture's exactly right. That the centre of focus for gold now has shifted away from Europe towards the US. If the US economy really does crack, and we do see a response from the Fed, which would entail further US dollar weakness, then gold goes through its historic highs. I mean, we're only a smidgen away from that now. But that would be the catalyst that could propel gold towards $2,000. But that's not our central expectation.
How crucial was the manufacturing data that we saw this week? I mean, was that important for you in your view on what we're seeing in the US?
Yeah, I think you can't sort of overreact to one piece of data and most of that. But I think what it did tell us was, that confounded economists, and it certainly confounded the bears of the U.S. economy. That number was quite a bit better than expected. And so it's really showing that some segments of the U.S. economy they're holding up okay. And the thought that the U.S. will double dip, which is going to be very difficult considering the low base that we've had, that's probably really been pushed to the back burner now. And I think we're going to get this, as the Fed describes, the slow muddling growth, but it will be growth. And as long as the manufacturing sector holds its own, it's one less reason to think the U.S. will double dip.
And Alan, just if I could ask you too about China as well. I mean, obviously, that rebound that we saw in manufacturing there during the week too. What are you seeing in China at the moment, and demand coming from that country?
Demand has held up really surprisingly well. The metal markets have weathered the slowdown in housing very robustly. And thinking about copper, for example, we reckon that last year there was something like 800,000 tonnes of excess inventory accumulated in China last year. This year, half of that has already been consumed. So underlying demand in China remains very robust.
And John, do you share that view too?
Yeah, I absolutely. The China bears have always been saying that this housing bubble in China will mean that everything's going to slow down there. But as we're seeing on the manufacturing side in China as well, it's staying quite strong. And the inventory numbers that you get out of London every night from the LME, China still has very strong demand for copper and other base metals.
So definitely an asset. Commodities as an asset as a whole? I mean, do you
Well,
believe?
I think the way it's held up quite well through all this scary situation that we had in Europe and the fears of the U.S. double dip, if those scenarios are certainly not behind us now, or those fears are behind us now, it's hard to see why commodities between now and the end of 2010 won't continue to trend higher.
Okay. All right. Great to talk to you. Alan, thank you so much for joining us today. Alan Heap from Citi Investment Research. Now to the political situation here in Australia. Senior coalition figures have lashed out at Andrew Wilkie after the independent MP rejected their offer and backed Labor to form a minority government. The other three independents will be making up their minds over the weekend. One of them, Bob Katter, has issued his own list of priorities, but insists he's not leaning one way or the other.
The coalition has stopped playing nice with Andrew Wilkie after the independent declared his support for Labor.
Did Andrew Wilkie double-cross you?
Good question. Good question.
Coalition MPs are incensed. They say Andrew Wilkie asked Tony Abbott for $1 billion to replace the Hobart Hospital. When the money was offered, he then accused the opposition leader of being unethical.
It was, for Mr Wilkie, ethical to ask for the $1 billion and to put a cogent case, but somehow it was unethical for the Coalition to accept that there was a compelling case for Hobart Hospital. I will let others draw their own conclusions.
Mr Wilkie is part of the Labor-Greens alliance.
The fact is that this will be the most left-leaning government probably since Whitlam, but perhaps before.
It is inconceivable to me that country independents would choose to go with what will be the most centre-left government in Australian history in a Green-Labor alliance.
A lot of people in the country are concerned about the Greens. I'm not.
Andrew Wilkie's decision takes Labor's support to 74 seats, too short of the 76 it needs to form government. The Coalition has 73 seats, but one of them, a West Australian national, says he'll sit as a crossbencher. At least one of the other independents says he will be swayed by the party that can carry the most support and offer the most stability.
So you're drifting down the right path. You know, that is where my thinking is at in regards to stability and outcomes. But I quite genuinely and quite honestly have not drawn conclusions.
Another independent was less impressed by the two leaders' efforts to woo Andrew Wilkie.
We now know what you are, it's just a matter of how expensive you are.
But that hasn't stopped him issuing his own list of priorities. They include support for Labor's workplace laws and national energy grid, the removal of taxes on ethanol, and opposition to an emissions trading scheme and Labor's mining tax. But Bob Catter is willing to be flexible.
You know, when I put down no mining tax, yeah, there's a lot of wriggle room from my side too.
The three country independents will make their decision over the weekend, which they hope to announce on either Monday or Tuesday. All three have had little positive to say about the Coalition over the past week, but insist they still haven't made up their mind. And there's no guarantee they'll all go the same way, even if there may be some merit in doing so.
If at all possible for the three of us to, work with one side or the other, it would be better, and I think that would ensure a greater degree of stability in a sense too.
You try running a government with one vote up your sleeve. Good luck to you. So what I'm saying is I'm going to be still out there and very, very potent indeed.
David Spears, Sky News, Canberra.
Stay with us. Coming up after the break, Bloomberg joins us for a check on the biggest Asian market movers. Plus, we'll talk strategy with our guest host, John Noonan, and discuss why he says you cannot only pay attention to fundamentals.